Now we get to the part of the show where I talk about what I believe is important for individual investors, what they should consider before they make their investment decisions over the next couple of weeks. As always, we have three topics here. The first one being US economic data. We also will get some Canadian economic data, but as we always say on the show, US economic data tends to move markets a lot more than the Canadian data does. Contrarian investing. I think individuals should consider being a contrarian investor if you're not already one. And lastly, on our list, trim profits with some of the winners. So if you have a winner in your portfolio, maybe you should take some profit off the table and move it elsewhere. So we're going to touch a bit on that as well. So let's look at the economic data. Right now, we're in the midst of getting a whole bunch of data this week. We have already received US GDP earlier this morning. It was the second reading of US GDP, a revised number. First reading told us GDP for the third quarter went up by 4.9%. Today, it was revised even higher, 5.2%. Unbelievable number. And yet inflation continues to tick lower. So we're getting stronger growth in the US, but with less inflation. So really important number we got this morning. Another important number for the Federal Reserve in particular will be the PCE indicator, which will be coming out tomorrow, Thursday, November 30th. And it's a number that we all know the Fed looks at very closely for indications on expenditures, consumer expenditures, and gives us a good indication how inflation is trending. We also tomorrow will get Q3 Canadian GDP coming out. That'll be interesting because many of us are anticipating perhaps another negative number. We saw a negative number for quarter number 2. If we get a third quarter number that is negative, that would indicate that we are in some sort of technical recession, mild recession here in Canada. Also tomorrow, another big number coming out, or more importantly, a big meeting coming out will be the OPEC meeting. OPEC plus, as we call it, which is your OPEC countries plus Russia. And they'll be discussing whether they want to cut oil production even further. With oil prices now down into the low to mid 70s again, it is thought that OPEC might cut production even further. Heading into next week, we have, or actually towards the end of this week, I know that Stats Canada says that Canadian jobs data will come out this Friday. I'm a little not so sure about that. Usually it doesn't come out, especially when December 1st falls on a Friday. Usually numbers come out the following week, which is when US jobs numbers will come out December 8th. But Stats Canada says that December 1st, jobs data in Canada will be released. So that'll be a number we all pay attention to. Next week, on Tuesday, we'll get JOLTS, which are your job openings. Those that are looking for jobs, those are moving from one job to the other. We're going to get the status on job openings. So a lot of data coming out in the US and Canada, and a lot of this data is going to move markets and move interest rates out, which we know is very important for the market. I have a few charts I want to show up here. We'll go through them pretty quickly. We'll start with the first one, which is US GDP. And you can see here that on the far right-hand side, it is ticked up. And we kind of weren't expecting it to tick a lot higher. But now, as I said, we are into the over 5% range. Many people are skeptical of this number. They don't think it's as high as it's actually being reported, whatever that means. But it is coming in quite strongly. Another chart we have here is, as I said, personal consumption and expenditures, PCE indicator. And you also have it here with the CPI, which is your inflation. And you could see how these two sort of mimic each other. CPI obviously was a lot hotter than PCE, but they both went up and are both now coming down. So we're looking for a pretty friendly or a low number on the PCE this week. Here we have a chart coming up next on WTI or crude. Oil pricing, you can see here, $76 as of yesterday. You can see how much it's come down on the right-hand side of this chart. Another thing to consider before you make your investment decisions is what's going on with the price of oil. If you're looking at oil companies to own, if you're looking at just inflation, we know if oil were to spike, that would also take inflation higher with it. The last chart I think we have here, yes, is actually on Canadian employment numbers. That's what we're told is coming out on Friday. You can see here the unemployment number in Canada is sitting at 5.7%, up from a low in the low 5% range. In the United States, they're approaching 4% unemployment. We don't have a chart on that, but I can tell you it's about 3.9%, was as low as 3.2%. So we can see that as interest rates have moved higher, we can see that, unfortunately, businesses have slowed. They haven't been able to hire as many people. And unfortunately, they've had to lay off, especially in areas like technology and banking, which is where we've seen a lot of the layoffs over the past, let's say, few years. The second point I wanted to discuss was that point about contrarian investing. And we talk about being a contrarian all the time. And if you look at the markets, or take a look at the markets last year, 2022, what was the worst performing sector of the market? What was the worst performing index? Was it the Dow, the NASDAQ, the S&P, the Toronto stock market? It was the NASDAQ. And for those that actually had the stomach to buy into the NASDAQ, or companies trading on the NASDAQ, and yes, not all companies on the NASDAQ are technology, and we know tech was the hardest hit sector. There are some pharmaceuticals and other companies that trade on the NASDAQ, but for the most part, it is very heavily weighted to the tech space. If you bought into tech in particular and the NASDAQ, you would have fared extremely well in 2023. We have a chart here of the NASDAQ, and you can see here, if you hone in, and we do here, you can see the vertical lines showing you how badly the NASDAQ did in 2022 and how strong the rebound has been in 2023 on the back of big tech earnings. We also have a chart on the QQQ, Invesco QQQ, which gives us a good indication. That's more specific to tech. And you can see once again how sharp of a rally you would have experienced had you been in technology at the start of this year. So being a contrarian investor has worked phenomenally well this year. If you bought the worst performers of last year and held them at the start of this year, you would have made out quite well. I also want to show a chart of the S&P 500, because just owning the S&P or stocks on the S&P 500 just in the last few months, if you were a contrarian and bought into some of the S&P 500 names, you would have noticed, obviously, September and October were poor months. You can see here that in and around mid-October, as traditionally happens, and we talked about the seasonal effects, I always tell you we come into September on a down note and leave October on a high note. Well, this past October, unfortunately, wasn't as good as what we normally see, but it set us up for a fantastic November, which is what we're in right now, almost done the month of November, and we've seen tremendous gains. S&P 500 up, anywhere around 8-9%. We've seen the TSX, Toronto market higher, the Dow higher, the NASDAQ higher. We've seen all indices in North America higher in November. And I think I have one more chart of the S&P 500 here, and this is just a chart, I guess, of the last month or so. You can see how well the month of November has been for individual investors. So contrarian investing, if you were contrarian at the start of the year, you would have done extremely well. If you were contrarian and bought into this market, I guess in the fall, September, October, you would have had an amazing November. So consider being a contrarian before you make your investment decisions in the next, I guess, couple of weeks. The last point I wanted to discuss for investors is trimming profits, taking some profit off the table of some of your winners. And if you've noticed, you probably, if you've noticed in your portfolio, you've probably seen that your big tech names, if you've owned some big cap tech names, that's where a lot of the gains have been this year. We're going to discuss that a little later in the show as well. But I'm going to show you now 3 charts from 3 different companies, which we've had on the show many times. And these are unbelievable charts. And taking some profit in some of these names, I think is a good idea. Do you want to sell all of these names? No. You want to continue to own them, but just trim some profit. Take some money off the table. First chart here is Meta Platforms, formerly Facebook. Look at this chart. Wow, what a chart. Had you owned this stock back about a year ago, look how well you would have done. Next chart is NVIDIA, largest chip maker in the world, $1 trillion market cap now. Look how great this chart looks Unbelievable chart. Again, NVIDIA has been a stock that has rallied tremendously, up well over 200% this year alone. And the third chart I wanted to show is Microsoft. Microsoft has been an incredible investment. Had you owned Microsoft at any point in time over the last year, you would have done well. So what do? Well, we look at these stocks, we look at your individual portfolio, take some profit off the table. Well, where do we put them? We put these profits into names that are good quality, but perhaps haven't gone higher as yet. And I have three names in a few different areas. First one is PNC Financial, one of the largest banks in the United States, one of the largest, we call it a super regional, one of the largest regional banks. You can see here how poorly it did last year, and it still hasn't recouped much of its losses. This stock at one point was well over $200 a share, pays a great dividend over 5% as well. So perhaps you sprinkle a little bit of your profit money into this name. Another name, Target. I've talked about Target before. As I mentioned, I think on the previous show or my radio show, I had clients ask me about Walmart instead of Target. And I said, well, why you want to buy Walmart when it's at a high, when you can buy Target when it's at a low? And I guess people may have listened to me, because if you look at how Target's performed recently, towards the end of November, we've seen a spike higher. Still nowhere near, as you can see, where it used to trade. This stock also used to trade well above $200 a share. And lastly, last but not least, Home Depot, a name we all know and love. I'm sure we all go to in the spring to fix up our garden, to renovate our homes. And you can see here, once again, Home Depot has had a resurgence as of late. This stock was below 300 a share, now at 313. But make no mistake, this stock was well above $400 a share not too long ago. So trimming some of your profits and moving those profits into some names like the ones I just showed you, I think is a good recipe for success. You also want to be a contrarian investor, which is really what that is all about. And you want to keep an eye on the latest economic data that is being released out of Canada and the US.